Okay, let's check out the immediate rebalance. Now, in my personal opinion, I believe that the immediate rebalance is fairly underused. It's something that I'd say I use all the time in my trading, but in terms of like ICT's repertoire, I think it's something that is overlooked, but it may answer a lot of questions regarding why certain imbalances don't get filled, how did you know price was going to run so aggressively, these sorts of things. And typically, or at least with my strategy, I'm always looking for a low resistant liquidity run. I want to see price rocket towards my target. So knowing and being able to see this, as well as obviously actually trading it, is a great utility to your arsenal. So there are two ways the market rebalances itself. We have on the left the deferred rebalance, and we have on the right the immediate rebalance. So everyone here will be familiar with the deferred rebalance. It's essentially where the market moves higher, leaves an area of inefficiency in the form of a fair value gap, and price at a later date comes and rebalances this level. Okay, that would be referred to as a deferred rebalance. However, an immediate rebalance will be where price delivers, let's pretend this candle hasn't formed yet. Price has delivered to the upside, okay, only delivering buy side delivery from this point here to this point here. And then immediately during the next candle, price will then come and tag or fill in the buy side delivery with sell side delivery, therefore immediately rebalancing that level and in essence not leaving an FVG. So that's the easiest way to look at it. It's basically where if this wick wasn't present, a FVG would be left here, but instead of leaving an FVG present, price has in the same or the following candle actually rebalanced that level. So a bit more about the deferred rebalance. So we know the market must offer, or its aim is to offer both buy side and sell side delivery. Okay. In this case, the market has moved too quickly, leaving an imbalance, which is this zone. So I know it looks a bit messy, but you can see how each or the red zone denotes some sort of sell side delivery, and the blue area denotes buy side delivery. So if you look through all of this, you can tell that this part here is the only region in this entire up move where the red doesn't overlap the blue, essentially this, and that's why it's a gap. Okay, and again, this is obviously caused by institutional players or smart money. This imbalance is later filled, and we can see that, right? You can see how the red portion comes and rebalances the blue portion. Okay, in the immediate rebalance, in a bit more detail, like we said, the market must offer both, or aims to offer both buy side and sell side delivery. So in these two candles, right, price has offered buy side, then we've come down, we've offered some sell side, and then from this point, right, that was the last time sell side was offered from here to here. Okay, then we've pushed higher, so it's rebalanced that, offered buy side there. Now price has moved higher. Okay, then it's moved higher. It would have moved up here at one point and then moved down. So we have buy side and sell side up here, but this area here, from this wick high to this body's low, only buy side delivery has been offered here. Okay, so the following candle, what happens is typically, or in the event of an immediate rebalance, that wick is going to aim to deliver sell side to this area where buy side has only been offered. So when price is in a hurry, okay, we leave FVGs. We understand that, right? When large participants enter into the market, when we have displacement, characteristically, okay, FVGs are formed. So when price is actually moving that aggressively, these FVGs are typically formed as breakaway gaps or institutional order fill entry drills, which is IOFED, okay, which are just partial fills below the 50% of an FVG. The reason why these levels or areas get formed like this, and a breakaway gap is basically an FVG that doesn't get returned to at all. The reason they get formed is because price is in such a hurry to reach the drawn liquidity, it doesn't have the capacity or the ability to actually retrace that deeply in order to fill in the inefficiencies. Okay. So the way we use the immediate rebalance, typically, right, you'll see, let's say this breakaway gap form. Okay, from this candle's low to this candle's high, we have a breakaway gap, fair value gap form. Okay, and then price is going to continue higher, making a new candle. Then, okay, typically what happens is you anticipate the retrace or the entry back into a breakaway gap. However, because like we said, price is in such a hurry to move to the upside, price will then only rebalance the previous buy side delivery of the candle just formed. Okay, therefore offering an entry here instead of all the way down here. So as you can see, I've written here, price will then immediately rebalance the next candle and fly to the drawn liquidity. And what we can do is we can use immediate rebalance as a measure of strength. So typically when this price signature is happening, it means price is in a hurry to go and reach the draw on liquidity. But how do we know we aren't actually going to tap the FEG, right? So this was a big thing. When I first learned this concept, I really was sort of racking my brain as to how do you actually know a breakaway gap's going to form, okay? And there's some really advanced ideas out there on how you anticipate this. I'm not going to go over them. I'm going to go over the ones that I think are fairly simple, make sense, and you can use to like today. So there's two main ways on how you can basically do this, right? So you have the idea of a confluence of a rate. So let's say, for example, we have sell side here and we flip bullish. Okay, we have a change in state of delivery. Price is moving aggressively towards this drawn liquidity, right? Let's just say it's an old high. Price then forms a breakaway gap after a plus 8 order block here. So typically you might think, okay, cool, we should now retrace back into the breakaway gap and push higher. But in actual fact, when we got the closure above here, we actually formed also an IFEG. So here now we have the idea of an immediate rebalance plus an inversion fair value gap. And in that way, you could then potentially enter here having your SL as a really aggressive approach. You can have your SL under here. I personally wouldn't do that. I'd have my SL beneath the gap just in case, or just a bit of leeway to say that you may be wrong, or this gap might act as a IFED. Okay, now for me personally, I won't enter on these directly. Even if I did have the confluence arrays, I won't enter directly on immediate rebalance. I know other people do, just personal preference. What I'd rather do is this. So let's say these are all daily candles, for example, okay? And let's just say this daily candle had just formed and this candle is in the formation of being created, and my drawn liquidity, that's my target on price. What I'd hope for, or what I'd like to see if I'm anticipating an immediate rebalance, is I'd want to see price off the open of the candle is retrace lower, tap into the IFEG plus the immediate rebalance, and then I'd want to start to see some displacement away above the swing high, and then for price to form some sort of FEG that I can enter on, and then see price run to the drawn liquidity. That would be my personal approach on how to target this. I just don't really like entering on them. Again, if you want to and you want to get good at that, then that's fine. This is my personal approach, and this is a very sort of fail-safe approach to actually go about doing this, instead of trying to predict with 100% certainty, right, that this breakaway gap isn't going to get filled. So let's actually take a look at an example here. So we have gold. We've just taken out 1, 2, 3 highs. We've pierced the high, and now we're essentially traveling back inside of this range. So just based on the monthly, we have some sort of bearish bias. Okay, on the daily, you can see it transition from that buy program to that sell program. So you can see this order block here gets respected. We drop lower, and now this is where the immediate rebalance comes in. So we have this FEG here. Okay, price moved aggressively away. We have an old area of accumulation here as well. Okay, and what essentially happens is this day opens up and it can't, or not can't, but it doesn't reach the FEG, and what actually happens is we hold that old area of institutional buying, which coincides with an area of immediate rebalance here. Okay, so we tap this level, right? And again, like I said, what I'm going to do now is jump on the lower time frames and see if we can get some sort of displacement. So we can see on the 4 hour, we respect the up close candle that gets held. We have some SMT with silver, which I haven't included. We also have a 4 hour FEG, but the key thing here is you can see that we tap the daily immediate rebalance. but then close very sharply to the downside. So we'll be able to see on the lower time frame, that's some nice displacement there. And you can see as well how this 4-hour level, the bodies are staying within that area. So now we can see on the 15-minute, right here we have Asia, here we have London, and here we have New York. So New York ends up tapping this most likely at 1:30 UK time, which is 8:30 Eastern Standard Time. We then displace lower, leaving an FVG. We leave equal lows here. We leave an order block plus FVG, which lines up with a H1 FVG, which you then can go and take an entry on. If you miss that, then you also have another opportunity at the propulsion block, and that goes and reaches lower where the draw would be, which would be this low here. So that concludes the immediate rebalance video. It's a bit of a shorter one, but yeah, I definitely think you should look into this. If you want to see more examples of me using this, then check out any of my weekly reviews, as I use it pretty much in all of my trading, also the Instagram as well. So I hope you guys enjoyed the video, and see you lot next time.